Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from RatesEvolved, brought to you by Viable Markets. It's the industry's only global interest rate conference. Joining me for this segment, we have Rich Winter. He is the Global Head of Product Sales and Strategy with Fenics, USTreasuries. Thank you so much for joining us on set here. Let's talk about the evolution of market making, a very, very hot topic. I'd love to get your take on it, what you've seen.
Sure, there's a lot of change in the marketplace over the last number of years. If you go back to the early 2000s, you know, the market makers were the banks. Banks were the epicenter of the entire treasury market. As electronic evolution has taken place, some of that market making facility has been, the banks have been replaced by PTS, professional trading firms, guys that are very familiar in the futures markets out of Chicago and out of New York, that have learned to be more high frequency traders, market makers, risk takers. You fast forward that into the buy side marketplace, and they're now challenging the traditional RFQ methodology and protocol of how a buy side investor goes and sources risk. Right, so now you go from basically an email request, say, hey, may I trade a couple hundred treasuries with you, and hey, this is which way I'm going and leaning and all that. You now have live streams where these buy-side participants can action a price without having to give up so much information, and those direct streams are becoming sort of all the rage. You're starting to catch on a lot more than RFQ.
Right, and are there challenges with these new workflows?
Oh, absolutely. You know, anything with technology creates a replumbing, a repiping, a re-electronification. So, you know, you've got set methodologies that worked from past protocols, and when you bring and introduce new technologies into this scenario, you then have to create new pipes and new plumbing, new electronic connectivity. So there's a lot of physical work that needs to be done in order to make sure people can access the new technology that's evolving the market.
Because fixed income markets are really complex. It's not like equity market structure. We can plug and play a one-size-fits-all methodology, same protocols and so forth. The asset classes are so different underneath the fixed income umbrella. I would imagine those protocols is what makes it really challenging, because this really is one of the last markets to electronify itself.
It is. It's amazing that you have the world's largest market, and it's been the one that's most slow to evolve. You know, the equity markets did this over 20 years ago. Futures markets similarly. Even markets like equity options have been doing this since the late 90s. So it's now just taking hold in the cash treasury market. Yeah.
Do you think how many more years do you think it's going to take to completely electronify it? Will it be all electronic? What are your thoughts there?
Certain parts of the marketplace will become fully electronic. It's just too commoditized of an asset base not to. I mean, there's still plenty of complexity within the treasury complex that you'll need a lot more intervention and hand-holding for sure. But some of the basic stuff like cash USTreasuries that we at Fenics care and most dearly about, we feel that's fully ripe for full automation today. And so maybe it takes another year or two, but the world is going to be fully connected by then for sure.
But overall, is it an improvement to market structure, to transparency, to liquidity? I mean, it standardizes it, is what it sounds like.
1,000%. When you take what used to be a bifurcated set of liquidity pools, dealers over here, dealers and clients over here, and you're able to give them one single pool of transparent liquidity that allows everybody to participate still within their traditional roles, but in a much more transparent, faster, more stable environment. It absolutely is going to create those benefits that the market needs.
Fixed income is going to be an awesome place to be over the next couple of years.
No question about it.
Thank you so much, Rich, for joining us at RatesEvolved.
Thank you.
And thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.